Hello, everyone, and a happy Sunday. Simon here again with AvaTrade, and we are having our weekly trading plan webinar. And I'm happy that we keep on doing it every week and having good feedbacks. And I hope that practically they're also beneficial to all of you. Of course, I want to welcome our first visitors, and I hope they will find this useful as well. And the whole idea of this webinar to give us the structure, the plan, the direction, and something that we'll stick to in the upcoming week. This way, our trading will be more organized and hopefully more profitable, which is proven practically by traders. When you do your homework, you have a plan, you stick to the plan. And again, I'm going to quote, you plan your trade and then you trade your plan. Before we go any further, I would like to read, as usual, risk warning. Any capital markets and trading information disclosed in this webinar is provided for informative purpose only and should not be construed or applied as investment advice, recommendation, or suggestion. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 71% of retail investor accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. And you can read the full risk disclosure statement. And it's funny, as I'm reading this every week, 71% of retail investors losing money. And I want to share with you from my personal experience. I've been doing this for 21 years. The first 11 years, I was just trading professionally back in New York on Wall Street. And the last 10 years, I do both. I trade and I work with customers, and I try to help and mentor people to see if I can help them improve their results. So I think it's not that I think, it's not only me thinking it, but I think the most or the biggest reason why actually investors and traders do lose the money because they really totally neglect the idea of money and risk management. Not because of lack of knowledge, not because they don't learn enough. Of course, there's always much to learn and so on, but because of the risk. And I usually say it at the end of the webinar, but I just want to really stress it out. Make sure that you have a risk plan. Make sure you stick to it. Make sure your money management is intact. Okay, so let's move on. And just want to show this before we go any further as well. You can be in touch with us on Twitter at AvaTrade, of course, and the YouTube channel has a lot of information that you'll find useful. That includes different tutorials for platforms. You have fundamental analysis videos, technical analysis videos, and so on. And as usual, agenda will go through different groups of instruments or assets. We'll go through indices, some Forex pairs, commodities, and stocks. And I'll go back on this. Basically, what I did, and I'll repeat it again. Some people just neglect fundamental. Some people just use just fundamental. I think combination is good, but it's up to you. But it doesn't matter. Are you a fundamentalist? Are you total chartist or a technical analysis trader? Which I personally am. For disclosure purposes, I like technical analysis. I don't really care much about fundamentals, but I do pay attention to them. I know when they come out. I know what's going on fundamentally wise, because I know that fundamental analysis. That's something that the big houses are doing, and their directions and predictions and so on based on that. And as far as economic calendar, it's really, really important to know, even if you're not using it. And I always say it, and I'll say it again, uh, economic calendar, I think it's important just to know the certain things that are coming in the certain times, because this way you have a choice. If you're experienced, you might take advantage of that. If you're not, you might stay away from that trade. If you have open positions, you make a decision whether you keep them, you close them, you re-enter later, and so on. Just the fact that things are coming out at a certain time, it's important. And I always say, that even if, let's say, NFPs, right, the first Friday of the month usually, I always say, even if all of us will receive a text message, I don't know, it doesn't matter, 5 hours before, 1 hour before, 5 minutes before the announcement, even if we knew exactly how many jobs were added, what's the unemployment, and so on, we could never make up what the market will do. Will the market go higher? Will the market go lower? Will whatever will happen? Because we're living in the times that, uh, when I started to trade in the year 2000, it's very simple. The market was crashing on the bubble, and there was a joke actually. The big traders in the house when I started used to say short everything with 4 letters. We only traded Nasdaq stocks. At that time, the sticker only had 4 letters. So the bad news was the bad news. Then the quantitative easing came in, and so on. 2008, as long as the bad news staying, there's going to be free money, printing money, and so on. And now I don't really know anymore. It's just very interesting how uh, the bad conditions in the market are good because the Feds are not raising the interest rate, or they're not starting the tapering. They are starting it now since the last decision. But I'm just saying, just go back how the whole thing started. It's like the news are there. How the market will react to it, we don't know. But we should know that it's there, just to know the reason why we have these spikes happening. Okay, so saying that let's go to economic calendar. What I just did, this is the whole week, but I took only the high impact events, which are in red. Whatever economic calendar you use, you have three bulls, some providers you have the red color and so on. So let's just go through. This is the high impact. I didn't take even the medium one, just to fit on one page. So Sunday we have the GDP numbers from Japan. The numbers are the times are in okay. So we have gross domestic product from Japan. Then Monday we have retail sales from China. It is kind of important because, in my opinion, retail sales are showing actually a little bit of the confidence of the consumers. Because at the end, the whole thing is based to be sold to us consumers. So retail sales, it's a good number. Let's see what China shows. Tuesday, we have Bank of Australia meeting minutes, and then the governor speaking. Then we have unemployment from UK. Then we have the GDP numbers from European Union. Then we have retail sales from US. This is a serious number. US retail numbers are very impactful on the market. Then Wednesday we have, again, very important consumer price index on UK, and the same thing for Canada. Then on Friday, we have the ECB President Lagarde speaking, and retail sales from Canada. Okay, so based on this, we can just make a little bit of understanding that the index, Japanese index, will be in play, including the local currency, which is yen. Then China in general will show what's going on in China. Australian dollar will be in play, and a lot of UK and Euro actions, and Canadian as well. And again, the European Central Bank President speaking. Okay, so let's switch now to MT4. We'll be using it. I erased all the levels from the chart, and we'll be starting fresh, and it also will help some new people and inexperienced people an idea of one of the ways of really drawing the levels, and we'll work on that in a moment. And just before we go to individual instruments, important just to see the big picture, what's happening, what are the things, and there are a few things that are in play, or everybody's talking about. There's a climate change, and we just had the meeting of the biggest countries, the 26, I believe, and there was all focus on US and China, and it looks like they found some common grounds there. I don't know the details, but if somebody's interested in details, you can find it, I'm sure. And we still have supply chain issues. We still have big ports loaded with containers. We still have boats waiting to be unloaded, California specifically. And we have the inflation. And this is something that created some volatility for us. So last week we had the inflation numbers from the US, and inflation is showing 6.2%, the highest in the past 30 years. So market reacted to it. That was on Wednesday, it was sold a little bit. Then Thursday, it was Veterans Day, which the stock market was open, but the bonds market was closed. And then when the bonds came back on Friday, the market actually went higher. Let's just see an example of S&Ps. Take a look. This is Wednesday sell-off. And then Thursday, we tried to move, didn't do much. And then Friday, we went higher. And I went through some articles trying to understand why the market went higher. And one of the reasons they showed that the bonds really didn't, the yield of 10-year bonds didn't really go above 1.6%. Because on Thursday, we couldn't know it because the bond market was closed. And the Friday, the bonds didn't really react as expected to the upside. And the market, when I also, there were some earnings, they were good and so on. So the market went up on Friday. And if you look on the weekly chart, we actually, let's see, open 46.84, close 46.81. So almost a flat week, a little bit lower than opened. Okay, that's the S&Ps. So that's in focus: climate, supply chain issues, and inflation. Let's see how this week will play on inflation. And let's start going through individual instruments. And I prepared a little bit of a cocktail of all the assets, and we'll be looking at certain scenarios for the upcoming week. So dollar index, we'll start from dollar index. And a dollar index had a very, very strong week. And if you remember, we said that the moment we break out of this 94.50 area, we're gonna really strive. And it was a beautiful, beautiful move. There's a little bit selling going on, but we still held this level around 94, 93.85. And then we shoot out on the CPI numbers, on the inflation number, we shoot out on Wednesday. Thursday we continued, and Friday was a little bit of a down day, but we're still holding. We're holding this ground after the move up. And if you look at the weekly chart, and that's why I want to say, you know, how to look at it. You can draw the levels in a certain way. You can draw the level by this spike over here that connects. Try to really connect as many points as possible, something that makes sense. So I'll just explain. We bounce from here, then this huge week bounce from the same level. From here, we made a new recent low, and then here we had a hard time to break, and finally we're out. So pretty much we're out of the woods. So on dollar index, we could go straight up on this excitement of Fed's possibly bring it closer the decision on interest rate increase, or we could come, and a lot of times what happens, just give you an example from here, take a look. If we broke out from this level, we came below, we shook everybody out, and then we had few weeks really touching and building this support. So the same thing could happen here. It was a resistance for a while, and we broke out. We're gonna try to show that yes, maybe it's a support now. Some people like to call it a mirror level. That means that we're going to from the sell area to the buy area as a mirror. So we could come and retest the 94.50, 94.60 just to establish a support and go higher, or we can just go straight. We'll see what happens there. So on this note, let's take a look what the currencies could be doing. And I found the Australian dollar very interesting here. And let's take a look at the daily chart. We were selling, we came to around this level, and then Friday it was a bounce. So we can say that Australian dollar could be gaining some kind of support. And take a look. Support, we sold out, came above, held it, support. Then again, we tried, we made a higher low from the previous one. Then we made a higher high from the previous one. Okay, so you can even draw a trend line just for you to see the direction. So it looks like that we could see some bounce from here. And for now, this level here, 172.90, I'm sorry, 0.7290, 0.73, this is the level that it could be playing as a support for now. And we could go higher, retest. We're not going to go too far thinking which way we're going to go. I mean, how far we're going to go. But it's very simple. We'll take one day at a time. We had 3 days, pretty much the same bars down. So potentially this upcoming week, if we're holding this level and dollar going into retesting for support, that maybe Australian dollar will gain some strength and maybe we'll move a little bit higher, and that will give us about maybe 100 pip move, not a bad thing. And at least we know, again, going into a risk management, at least we know that probably or possibly this could be our stop, the low of Friday, which would be 0.7276, and that's could be one of the scenarios. So this is the Australian dollar. Canadian yen. The reason I brought this one up is we are also sitting on this level. This was the level that was having a lot of actions, and now since we kind of are sliding from the highs, we're holding it. We had a one closure below it, and now we're up again. So again, if this level holds, let's take a look at the weekly chart. We could bounce, or if we actually choose, which shows a little bit of a pressure to the downside, if we close on the weekly chart, we haven't closed below yet. If we close below, we could slide. A few factors. Canadian dollar, we have inflation numbers. Also in Japan, we have inflation numbers. So on both, it's going to be interesting. And also the oil. We'll get to oil in a moment. We'll be seeing what the oil is doing there as well. Okay, so that's CAD JPY. CHF JPY, similar idea. A lot of action on this level here, a lot of tails. See, when you see tails and the stop around the same level, that means they're trying to get the stops out, but we keep on going higher. So it's really building support here. After this move, we're holding this level. So it could be continuation to the upside, or the same thing, we close below it, we could tip lower a little bit and start looking for some support. And Euro's been super weak, even Euro against the Swiss. And I brought this up over here. We approaching, this is the weekly chart, we're approaching the support here. So that's why it's you see, take a look. At the moment we get closer to this is a weekly chart, 1, 2, 3, 4, 5, 6 weeks. We try to break this level, and then the whole recent move up started from here. So we're getting closer. We are about 30 to 40 pips away from it. And if you look at the daily chart, it looks like maybe the buyers are stepping in already, trying to protect this level, maybe trying to load, saying, okay, it's time to buy. We don't know, and we don't really need to know, but we'll be watching what's happening this week. If we see some price action pointing to reversal, it could be a nice potential trade over here on Euro Swiss and Euro USD. Euro USD has been super weak on the strength of a dollar, and we also approaching the level of potential support. We not that far away from here, but Friday, take a look. Friday was a strong selling day here, and let's see how this is not the Friday, this is the whole week, I'm sorry. And take a look, we had a big sell-off there's not a bounce yet. Let's go to maybe a smaller time frame. There's no bounce here, so we'll be watching the euro potentially sliding a little bit lower. Of course, the 114 psychological even number would be something to watch, but again, there's some speeches and inflation numbers this week. Let's see what happens there. And USD ZAR, we spoke about USD ZAR. We said last week that we held the 15 and we went briefly below 15, and then it was a strong move. This is the Wednesday move on inflation, of course, dollar related. So if we to look at certain levels, this is the level from which we sold out. So to be totally out of woods, we would need to break and close above this level. Take a look. You see, we draw the level and take a look how they all connect almost to the penny or to the pip. This is where the moves finished. This is where we had a hard time breaking. Again, action here and here. This is the weekly chart. And again, we're fighting from this level. And again, we are clearly trying to build or get a stronger uptrend after this sell-off. It was a big sell-off, but we are making higher highs and higher lows. But this level is really, really important. And if we do break out of it and the closure here, you will see how buyers will actually line up to build a long positions in this instrument. Okay, so that's as far as Forex. Let's go to commodities. And we'll start from crude oil. Crude oil had a tremendous move higher. We can draw a weekly level around here. You see how the levels repeat? Again, I don't need to make things up. We bounce from here, and this is the next bounce. And now, if we choose to go lower, the 76, 90, or 77 level will be a hard level for it to break lower. But it could be that we'll be testing it. And again, I think this week inventories on Wednesday, it's very important to watch because last week that will actually trigger the sell-off. This is the Wednesday sell-off. And the week before also we had that thing high inventories, and this is of course the inflation numbers and so on. But if we choose to go lower, which we could, we probably have a hard time breaking 77 at least for a while. And on the upside, we haven't touched the recent highs. So if you take a look, each high is lower than the previous one. 1, 2, 3. Okay, that's crude oil. Natural gas had some interesting action this week. We really sold. This was the hope over here after we touched the support, and this is important level to watch this week. Take a look. From here, we made a new high. We didn't all the way retest it. That we failed, so it's a kind of a lower high, another lower high, and then we came to retest it this time. And then that was Wednesday, and then Thursday we thought we would be out of woods and go higher, but we didn't, and followed the Friday sell-off, a huge candle without any bouncing. So this 473, 475 area, we'll be watching for natural gas to either hold and return to retest the highs, or if we break it, we could go and slide lower till we find a support there. Of course, we'll be watching any fundamental things, and of course what oil is doing as well. So that's natural gas. Gold finally got out of the woods, and the inflation really helped. This is the level we'll be talking about, around 1833, 1835 level. We broke out of it and we closed higher last week. And let's take a look at the daily chart. Wednesday we moved higher. We gave away about half of the gains. Then Thursday continuation, Friday continuation. So for us to break out, we need to break the Wednesday high. That's 1868 and a half almost. And Friday we actually at 10 cents higher, but we closed low. But it's very, very strong holding. And on the weekly chart, it shows if we are breaking from here, the step-by-step thing would be the next level, and that's 1912, 1913 area. Okay, very interesting. There's a lot of excitement about gold. The believers that are stuck with a position, and they hopefully will be making the money now, because for a moment they're really scared with these moves lower and so on. But now we're back, and take a look. There were a lot of attempts to break it. We couldn't, and this week or last week really helped with the inflation numbers going higher. So a few things. What would help gold fundamentally if the market really sells. So that's something they call the risk of trading will kick in, that the money will go from the risk assets into gold and possibly yen, Japanese yen. So that's gold. Let's take a look already at other metals. Platinum also had a move up. Palladium as well. Okay. And copper. Let's take a look at copper. The weekly chart. We actually had the pretty much repetition of the previous week as far as the range. We're still in the same range. So we had just to remind, we had this move on copper, then we had a correction almost across this huge bar, and now we're sitting here. So let's see what happens in China. Let's see what happens in general on the market. Copper is at this point, I believe it's a demand driven. So if demand is there, we can go retest it. Let's see. We're not gonna guess anything here, but I believe we'll have a hard time breaking these levels here, 445 and so on. Okay, so that's as far as the metals and energy. Let's take a look what's happening in soft commodities. And we discussed it last week. Wheat is a champion. It broke out of this range and is on the way higher. I think, yeah, it's not all-time highs, but it is high. So we did close the week on the highs. Let's take a look at the daily chart. A little choppy with the tails, but strong. So we could have continuation or we have a pullback. Let's see what happens there. Soybeans, double bottom and bounce, but we're still in the range. For us to get out, we would need to break this 1262, 1263. Otherwise, it could be continuation of the ranging here. And corn confirmed. It looks like it confirmed the previous resistance, and now it's a support based on this action here for the last week. So 548 we're holding, and for corn to join wheat on this action here would need to break the Friday's high, and this is 581 and a half and 581 and a half. Take a look as levels repeat itself. The same penny to the penny, 1 and 2. So for the corn to continue higher, would need to break this level here, which is 581 and a half. And if we do slide lower, we could find the support here again at 548 level. Okay, that's as far as commodities. And one of the heroes that I spotted, actually, it was very nice classic trading. Take a look. After this move, this was the level from which we bounced. We touched it again. Take a look how levels work. Very interesting, mystically, right? Just to show it. 214.80, 215, 20 cents. That means, simply speaking, there's a limit seller here, somebody or a group or whoever are, they really had to sell because it stopped. This huge tail stopped at the specific level, and here it proved that the seller is still there. And then we played, but we did find, we didn't go all the way down, not even here. We actually found some support at the much higher levels, right? And from here, we played around these levels, 199, let's say 200. So the range was very tight range, about $15 between 215 and 199 or 200. And this, after this fake breakout, the last one, we went straight higher. And this time, the seller's not there anymore. And people there, or whatever I don't want to call people, traders, machines, robots, I don't know, whoever was selling there, hoping that we're gonna slide for the third time, make it triple top. They had probably, I'm just thinking loud, they probably had some orders to sell short, and the moment the impulse started, those short orders actually turned into panic buying back, because you don't want to be shorting on this huge impact, and that's added to the buying of this instrument, and we went nicely higher. So a scenario for this week, we could continue higher, and it could be anything. We could break these levels here and go for the highs in the near future, or we can go, like I mentioned in the previous example, we can go and say, okay, let's test if this 215 level is really serious. If the sellers are not there, maybe the buyers are going to be holding it. So they might push it back to 215, and let's see how this level works this week. So coffee, very, very interesting, very volatile there. So that's it with indices. Sorry, with commodities, and let's move to indices. And we did start this presentation with S&P, so let's go back there. We have a double top here on the weekly chart pretty much, and just we'll be looking at the daily chart. Just again to remind, this move down happened with the high inflation numbers. Everybody panic, okay, the Feds are gonna move the interest rate decision closer, the bonds are gonna respond it, and so on. Here, the bond market was closed, and then the bond market opened, but it didn't react as expected. We stayed below 1.6% yield on 10-year treasuries, and this is it. So we are trading in the top range of this move. The same thing is on Dow Jones. The same thing is on NASDAQ. So this week is going to be very interesting. I don't want to say it's going to be crucial, but it's going to be very interesting how it will be digested. We're going to have a full week trading and so on without any interruptions on the bond market and so on. And Nikkei had a sell-off. Now we're on the way to retest this recent highs, possibly on Nikkei. So this is our range now. It's very easy. This is the level from which we bounce, and then we found the support here. So this is the current range. Okay, this is one of the ways you can draw the chart, and then when you zoom in the small time frame for the trades, it will show you where are you closer to the levels, where is the safer to buy or sell. And we have Nifty. We spoke about it, how when the market had the correction, Nifty was just the Indian index was going higher. And recently we had a nice correction, 1 and 2, and then we on the way to probably retest the previous highs, but we're having a hard time. So the high level here is 18,194, and Friday 18,213. So with the highs, but the closure is pretty much the same. So we can draw the range here as well. This is where we stopped the recent decline, and this is where we're having a hard time breaking higher. So this is our range on Nifty. FTSE was very interesting on Friday. I was watching it as the market was going higher. I remember FTSE opened with a gap actually. It opened with a gap and it was held for a few hours, but then it really, really fell down. And this is the only index that actually was selling on Friday. So it could be anything. The GDP numbers are not so great and so on. But I just want to show it how fake could thing be. You know, we gapped, we held, and then we went lower on the other markets, including I believe the DAX. Even the DAX was DAX was also sell. So European and UK indices were selling. let's say, French index actually is made a new high on Friday. Congratulations. Viva la France. Okay, so we'll be watching this week on a possible either continuation higher or correction. And for that to happen, we'll be using S&Ps as a major indication on the global markets. And if we're choosing to go higher, we'd need to break the all-time highs. It just happened a few days ago, and the high was there 47.11 and a half. And again, if to go lower, we'd need to break the Wednesday's low. So this is our current range. And it's important to have current range on your chart because you won't be surprised. Let's say, you see panicking, just a scenario, you see a huge move higher and you're short and you're panicking and you're out or whatever, or you need to buy. And then you see, that you're getting closer to resistance. So the chances of reversal are there at a certain level. If we stopped here, there's also a possible scenario that we're going to stop there again. So, or the same thing here. If we find support here, we could find again until we really show some closings on the higher time frames on those levels. So indices could be anything this week. We'll be watching the news. We'll be watching the price actions. We'll be watching what's happening. And I'd like to show you a few stocks. And before that, just a quick one on Bitcoin. After making new highs, we're sliding. We're trading around 64,000, and Ethereum also sliding a little bit. There's a lot of consolidation here. It could be anything. We can go higher, we could go lower. I've read some articles that actually European regulators are pushing to some kind of regulations on cryptos. I really don't know. We'll probably hear in the upcoming days or weeks what's happening there. And I have, for dessert, I have a few stocks that I'd like to mention. And we'll start with Disney. We actually mentioned Disney last week. We spoke about that the upcoming earnings are coming, and the earnings are really, really bad. Take a look at the stock. The news came after market. So the following day, which is Thursday, Disney opened with, I think it was between 9 to 10% move to the downside. It continued lower. It closed a little bit higher than the low of the day. And Friday, it was on the way to retest the low. So it's a lot of pressure there. And the main reason, of course, we know the parks and so on, and they're not really in the full, they are opened, but they're not working in the full capacity due to COVID. And that's also hitting the bottom line of the company. But the main reason is the subscribers are really not rushing into the Disney Plus, the streaming business that they opened about 2 years ago. So the subscription rate is really, really low, and they were not really excited into going to the future. So this is what disappointed, of course, the investors, and they dumped the stock. And this upcoming week, we'll see what happens there. I think, again, we could go and retest this level here. We're not far away from here. And then, yeah, take a look at the monthly chart. We might find some kind of support around $6 from now, 153.5, which could be also a good thing. Or for some mysterious reason, we can go higher, which I don't see it. So that's Disney. We have a few stocks that are reporting this week. There are more than 3, but I chose 3 here. That's Alibaba is reporting on 18th before the market. So I like when they report before the market, not specifically Alibaba, but any stocks if they report before the market. So it's the same day you can trade it. And so that's Alibaba on the 18th before the market. And it looks like it could be finding some support here. Hard to say. Oh, there was a monthly chart, sorry. Daily, yeah, it looks, but it's very choppy. Just remember it's ADR, so it's a foreign company trading in US. That's why you see all these gaps, because also trading on the both continents. So that's Alibaba. Cisco is reporting after the market on the 17th, and let's try to make some sense from here. This is where we stop at the move higher. Then recently we tried going higher, we failed. We had the fake. I think the level here at 50, 58 level, it's acting as a strong resistance. And let's see what the week shows on Cisco. We're not gonna guess here. Walmart, very interesting. I've been watching Walmart since I started talking to you on these webinars about it. And if you remember, we spoke about all this move when Amazon actually came out with the announcement. They're building retail stores, and that would really hit Walmart hard. And the stock went down. We stopped around 134, 135. There was a nice recovery. One of the reasons there was a pension fund who was buying them, and they did a great job for Walmart. And here, this is the beginning of the move down. We played around it, with another attempt with a huge spike, and then we're selling here. So Walmart is also reporting on the 16th before the market, which is very interesting. So judging by the latest action, it looks like we're in the range now between 147 and 149, like $2.5 range. And let's see what happens. Friday on the market going higher, the Walmart sold. Maybe some people know already what's happening with the earnings. I really don't know, but the chart usually speaks for itself. But for us to really think that we're going lower, we would need to close below 147 and a half to 147 and show some weakness here. Okay, but anyway, the earnings themselves are coming on the 17th. On the 16th before the market. Okay, that's the Walmart. And let's take a look at the big guys. I go through them quickly every week. Tesla, a lot of games from Mr. Musk. It was I call it Russian roulette when he did the questionnaire on Twitter: should he sell or should he not? And 52% said yes, so the stock went down. He sold it. His brother, who's the director of Tesla, was something new for me. I have to admit, I never knew that his brother is the director of the Tesla Motors. He also sold tons of stock. So the stock went down. Wednesday recovered a little bit, and Thursday and Friday with the gap continuation of going lower. And I just read today that says that Musk, after selling a bunch, and the reason he sold, he wants to pay his income tax, then he sold again. So even though it looks like fun in the game and everything else, but in the old-fashioned way of thinking, if the insider is selling, it doesn't look good. So but on the other hand, Tesla is a champion. All other companies that are trying to work on electric vehicles, they're just playing catch up. So Tesla is great. There's some predictions that the stock's next stop is 1500. Some say that 2025 they expect 3000 price tag on it. Let's see what happens. Strong stock, lots of action due to the insider selling. Boeing had to move up, a little bit of consolidation. We're not going anywhere. Disney, we spoke about. Facebook had a nice Friday. The stock is up. We are on the way higher, but this is where we fell from. So 343, 344 level. Let's see what happens there. We are trading in the current range over here. This is the daily chart. GE is something that I spoke to my team about. I don't know if you're following the news. The company is actually splitting into three directions. I think it's healthcare, energy, and I think finance. I might be mistaken. But the moment they announced, the stock went higher with the gap. Now we're right back before the move. So Let's see what happens. Now, the split, just to you can read it. Actually, I suggest you read it because it's one of the oldest companies, one of the first members of Dow Jones. Solid company, but since 2008, they really couldn't really pick themselves up. There was a lot of issues there. They sold some units to China, the famous appliances and so on. And now they're splitting the company. It's not going to happen today or tomorrow. I think it's 2023, 2024. It's going to be done by stages. And they believe that it will be beneficial to the company. So let's see what happens, how this week we actually will take that. Netflix, after it's been the same thing, every sell-off followed by the new high. Same thing here. We had a sell-off of 2 days and then we came right back. Pfizer on this pill. This is the news on the pill when they announced. And we are trading high and we're holding the level. We still didn't break the recent highs. Apple below 150. So that doesn't look good. 150 is a key level. We are really massaging the level, we're playing around it, and we're sitting here. So let's see what the market. I think the Apple is trying to see what the market is doing itself, and this week is going to be interesting. Microsoft, strong, a little correction here. We are on the way to confirm the highs. Google, also strong. Amazon, similar to Apple, 1, 2, and we're not out of this level around 35.54, 35.53. We also have a hard time staying above these levels here. And that's it pretty much. Now, 2 more things. I think I spoke about it last week. I'll bring it up again. Is Snapchat. After all this sell-off, remember where all these social media things fell down, Snapchat was leading the fall actually. It's been really having a hard time breaking lower. So it's kind of accumulation here. The question is it accumulation for the turnaround? Is it accumulation before going lower? I guess we'll see in the upcoming days or weeks. And Twitter actually broke through. I spoke about it last week when both of them were sitting, and so far, just to give you a comparison, the Snapchat really held this level, right? The 51.60, and Twitter didn't. But Twitter came to this level here. So we'll be watching both of them on possible continuation on the upside. And Nike, after this robust move, it reminds me of Walmart chart, right? Let's take a look if I'm right. So this is Nike and this is Walmart. Similar, the V recovery, very strong, 1 and 2. And Nike is pretty much doing the same thing. And take a look. We sold really hard and we came right back. We even made a higher high than the previous one on this excitement, and we came straight in, and now we're holding. So the nice swings here for swing traders. This is beautiful. It's really not a long time. On the weekly chart, you can see as a V. We came straight to the support. We recovered. We're low. Maybe we'll be making W's. I don't know. I'm trying to play alphabet here. Okay, guys. I want to thank everybody for attending. I want to wish everyone an amazing week, happy, healthy, and of course productive week. Hopefully, the market will be giving us opportunities, and we'll be grabbing it. Have a wonderful week. All the best.